Hi, I'm Nick Riley, and in this video we're going to have a look at a stop order. However, this is going to be a stop entry order. This is for a trade we want to do in the future if the price gets to the level we're happy at. So, in this case, I'm looking at a stock called Lowe's. You can see from the graph that the market's pushing up. However, every time it gets to a certain level, it's meeting resistance. So if we park that up there, we'll see it's just about in line. So every time the market gets to this price, it's repelled. What you'll also see is that, and this is a swing trade, this is on the daily chart, it's formed a bearish candlestick as we get to this resistance point. Now, I do want to go short in this trade. However, I only want to go short if it gets below a certain level. The reality is, if I was extremely confident, I would know that it was going down and I could simply execute a short order at the currently tradable price. I don't want to do that, however. What I want to do is I want confirmation that the price is going my direction. So if this truly is a reversal candlestick, then I want to get in just below the low of the candlestick. So I'm going to actually click on the candlestick here, and I'm going to expand this out as well. So we can see here that the low is around about 38.66 for this candlestick. So if I go over to the order box, I can see now that it's trading at a little bit slowly. It's 38.74, 38.75. I want to short sell, but only below 38.66. If I was extremely optimistic that I was correct, then I could simply hit the bid here at 38.74 and get what would be a decent fill. However, I want the trade to go my way before I take it. So I'm just going to load up 500 as my shares. Again, I want to make sure I have the right ECN, so I'm going to go ARCA S. So again, this is a stop order, but this is a stop entry order rather than a stop loss order. So now I'm happy with what I'm doing. I have the right stock, and always confirm that this matches this so that you're trading the correct share. I'm happy to short 500, and I'm going to click short. Again, it is warning me or giving me a caution, if you like. Click OK because I do want to continue. So I now want to get into the share, and my trigger price is 38.66. I don't, however, want to go in at market because if it goes down, it may bank really quickly. So I'm going to click on the drop down box, and I'm going to click on limit. You'll now notice that there are two boxes available to me. I do want to short this at 38.66. So I'm going to type 38.66. However, there's a limit to how little I will actually accept for the security. So I will say 38.64. Because I'm doing this, what will happen is, let's say we get to the trigger of 38.66. If it moves down violently, then the first tradable price that I may receive might be 38.62 or maybe even 38.60. I don't want to be in a position where I've shorted the stock for 38.60 or 38.62, so I'm setting my lower limit at 38.64. I'm now happy with what I've done, so I'm going to click OK, and you will see now that I have entered an order to short sell the share at a specific price, and here you can see the lower limit for that price. So now if the market starts to fall, then you will immediately see that as a stock gets closer, my order's active. It's simply waiting to be triggered and executed. So all I'm doing is playing a waiting game. And if the stock doesn't fall in price, then I won't get triggered. And that's important for me. I only want to trigger into a trade that I'm waiting to do in the future if the conditions are right. And again, if I were to look at this as a long trade, or rather not lows as a long trade, but if I were to look for a long entry, I would perform exactly the same process. The only difference is, rather than pressing the short button, I would press a buy button. And the other difference significantly, or rather crucially, is that if I'm entering into a short entry order to buy in the future, I will be wanting to buy above the current price.